Good morning. Welcome to the News Hub. I'm Rolfe Winkler. The monthly jobs report is in. It's Jobs Friday. The unemployment rate moves to 7.8%. That's up 1/10 of a point from 7.7% last month. Meanwhile, non-farm payrolls expanded 155,000, just a bit more than economists expected. We're joined right away by Sudeep Reddy, Wall Street Journal's economics reporter. Sudeep in Washington. Fast reaction. Can Sudeep hear me out there?
The trend.
Great.
I sure can. It's right in line with expectations, and it's right in line with the trend from 2011 and 2012. And so we're basically in the same labor market we've been in all along, and all of the hopes that we'd be able to bounce out of this as the holidays approach are erased with this, and all the fears that we were bouncing out so quickly that the Fed would pull back are also gone now. And so we now are back in a period of waiting and hoping that in the next couple of months things clear up here in Washington to generate more jobs across the economy.
Okay, Sudeep, stay with us. I want to jump over to Phil Izzo, the editor of the Real-Time Economics Hub. We got Phil, Pop-Up Phil, in the newsroom. Phil, good morning.
Hey, Rolfe, how's it going?
What's happening behind the numbers?
I got to say, it's a little bit less than expected. The numbers aren't particularly great, but considering all that was going on last month, they're really not bad. We saw it's solid employment growth, 155,000. We saw a nice jump in construction, probably related to like Sandy rebuilding efforts. And the unemployment rate, it was at 7.8. Last month, originally reported was 7.7, but they revised it with the annual revisions today, and they actually revised that number to 7.8. So essentially, it's unchanged. So the unemployment rate didn't really increase. It stayed to where they said it was last month. And then when you look deeper into that unemployment rate number, it looks like it's people entering the labor force. Last month, we had a big Hurricane Sandy effect. The Labor Department said it wasn't huge, but when you looked at the numbers and when the survey was conducted, there was definitely something going on with people dropping out of the labor force because of Hurricane Sandy. This month, it seems like those people might have come back in. There are more unemployed people, but it's also because it might be they're looking for work again.
Okay, well, and Phil, that would be a good sign of recovery in the labor market. That, I mean, for a long time, for years, we've been talking about people falling out of the labor force. Does this show that is starting to turn?
Yeah, I mean, it's not a huge move, and we still have a low participation rate, which means there still are a lot of people who are out of the labor force who were in it a couple of years ago. Mm-hmm. But there are a lot of demographic factors behind that. The fact that this month we're seeing some people coming back in is probably a good sign. Again, part of that is probably related to Hurricane Sandy because there were people who dropped out to take care of all the issues that were going on then. But this is probably a good sign. It is more of a trend that we saw earlier last year, and that was reversed a bit after the hurricane. So this is moving back in the right direction.
Okay, Phil, stick with us. I want to jump back to Sudeep quickly. Sudeep, you mentioned we started talking a little bit about the Fed. Now, I know the minutes from the December Fed meeting came out yesterday, surprised some people because it said a bunch of Fed governors, it looked like, were saying we're going to come off. QE is going to end, they expect, in 2013. Now, we know they're looking at the jobs number at the unemployment rate as their main gauge for when they want to step on the gas with regard to money printing. How does this report impact their thinking?
This certainly doesn't move them up in terms of removing QE3. You did see a lot of Fed bank presidents weighing in, suggesting that it might be time in 2013 to pull off of QE3, and you're still going to probably have that feeling that maybe as you get past the next 2 months, get past the debt ceiling, you'll see some bigger upturn in the economy. There are plenty of reasons to be cautious of any jobs report, this one in particular, given that you had the holiday season, the effects of Superstorm Sandy, and any risk from the fiscal cliff and worries about that potentially hanging on over employers. And so it's possible that we might be in more of an upturn ahead. But from the Fed's perspective, this is really the same kind of trend. It's largely stagnation in the labor market. It's not really much more than that. And so they're not going to be eager to pull back just yet.
And I know, Sudeep, you've talked a lot about we talk about the fiscal cliff, and people aren't maybe as focused as they should be on the payroll tax, which has gone up, which is going to hit disposable incomes, and that's not going to be good for GDP or growth. Now stay with us, both Sudeep and Phil. I want to bring in Brendan Conway, Barron's Jobs report. This is your excited face. This is your game face.
That's right, Rolfe.
How does the market like this number?
So the market is basically doing exactly what it was right before the report. Further to Phil's point that, this doesn't push us, decidedly in one direction or another. Futures are up slightly. But Rolfe, I think the big market story right now is what didn't happen, which is that if we had gotten a big blowout number, this would have created a serious problem for bond investors. The bond market is already very worried that the world's biggest buyer of treasury bonds is about to pull the rug out from under them. So yields have been on the upswing. I think you would have seen a big spike in yields today if we had gotten a very strong number. That didn't happen. So the market's going to be calm.
So good news would have been bad news, but no news is not bad news.
No news is you still have time to figure out what you think the Fed is going to do.
Okay. Phil, I want to jump back to you. Anything else you noted in the report?
Well, there are things to be somewhat concerned about going forward. I mean, incomes are up a little bit, but just barely keeping pace with inflation over the course of the year. We're also seeing that there was a drop in retail trade employment this month, which generally that there was probably unseasonally adjusted. There was probably a huge jump because it was the holiday season. But the fact that there was a drop makes it seem that the holiday hiring was not up to par with recent years. And that might be some sort of effect on confidence. It might be concerned about retail numbers that we're going to get. We've already heard some numbers from the holiday shopping were only mediocre for this year. That tends to support that narrative that it might not have been a really great holiday season for retailers.
Okay, Sudeep, quickly, I just mentioned the payroll tax. Is that the biggest issue for the economy coming out of this fiscal cliff agreement?
It's certainly one of the biggest issues. Probably as soon as February, you'll see this hitting consumer spending. It's going to certainly weigh on job creation in the overall economy in the coming months. There's really no doubt about that. There's still, of course, the big debt ceiling battle coming up over the next 2 months that could be more dangerous than the fiscal cliff. And so we have to see whether that has any effect on business or consumer confidence. But overall, it's probably a fairly good sign, given all the risks we've had in recent months, that we've stayed the course in terms of at least staying on with normal job creation that we've seen over the past 2 years. So at least we haven't fallen apart.
Okay, Sudeep, Phil, thanks for joining us. Brendan Conway, last word to you.
Last word to me would have to be about gold. After the Federal Reserve came out with the minutes yesterday, gold futures fell, and this morning they're down about 2%. There are a lot of traders out there who I think are starting to question their belief that the Fed is going to continue easing and easing forever. That's something to watch today.
Okay, Brendan Conway, Phil, Izzo, Sudeep in Washington, thank you so much for joining us, and thank you, viewers, for joining us on WSJ Live.